Hey everyone, Couch Investor back to another video for today. So in today's video, we're going to go over NIO's and Rivian's earnings report. If you've been following the companies around, you know that both of them are down substantially. Now, both companies are in different situations right now. Rivian compared to NIO, as you can clearly see here on the screen, especially when it comes to revenue, still far, far away. Now, yes, there are some similarities, as you can clearly see on the screen as well. Both of them free cash flow negative, return on equity negative as well. But when you look at gross profit margin, NIO does perform much better than Rivian. No surprises there. Rivian's still just I won't call it a tiny startup, but compared to NIO, you could call it a small startup. The ramp up, the acceleration still hasn't happened, and they're still burning a lot of cash. Now, when it comes to purely, let's say, price to sales valuation here, because we're obviously not going to look at a PE valuation or a PE to growth metric. So Rivian here, price to sales ratio in the next 12 months, 3.5x, where NIO is a bit more appealing, let's say 1.2x. Now, that said, you know my thoughts. If you want to go with an EV maker, then there's just one company for that, and that's Tesla. But I do know that a lot of my viewers and probably readers on the Motley Fool are interested or are following companies like NIO or Rivian. So that's why I'm making this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So we're going to start off with some news with regards to Rivian, work our way through the earnings report, and then touch on NIO. So first up, with Rivian, apparently it has issued its second major recall in 6 months, this one relating to the passenger airbag system being affected by an automatic locking retractor, ALR sensor. The recall affects 12,716 vehicles, including R1Ts and R1Ss, and plagues roughly 89% of the vehicles the automaker produced in September of 2022. According to NHTSA, so I'll read this, Rivian Automotive is recalling certain 2022 R1Ts and R1S vehicles, a faulty automatic locking retractor ALR system in the front passenger seat belt system may incorrectly report as on when it's actually off, causing the suppression or improper deployment of the airbag. So again, not great news when it comes to Rivian and the way the car is built. For example, when we hear about, recalls when it comes to Tesla, usually it's something they can't fix with an over-the-air update. With Rivian right now, the struggle seems to be real, but they are touching on this a bit during the shareholder letter. Now, some good news here, and that's the CEO RJ shared on Twitter. So he shared a new Megapack plus dual motor all-wheel drive configuration for the 7-seat R1S is coming this fall, projecting 390 miles of range. So for the new customers that are excited to see this, well, here you are. Now, when it comes to the earnings report, so they say here the key highlights, approximately 400 miles of R1S and R1T Max Pack launches in the second half of 2023. And this is what we've just seen. Over 25,000 vehicles produced since the start of production as of December 31st, 2022. 36% quarter-over-quarter increase in production, which is less than the last quarter, by the way. Over 10 million packages delivered via EDV. And of course, the cash pile keeps on decreasing. We're going to touch on that a bit later on. So it's approximately $12 billion. Now, the production target for 2023 is now at 50,000. The street was expecting a bit more than 60,000. So that's obviously why the stock took a major hit after they reported earnings. But there is some explanation. And so they say here, as previously stated, we have scheduled downtime in production this year to enhance our products and production process. And they also gave us the guidance here, so 50,000 vehicles, adjusted EBITDA, a loss of $4.3 billion, capital expenditure of $2 billion. Now, with regards to the downtime, of course, this is going to affect the end goal for 2023, and that's maybe why they gave us a number of 50,000. But this could be a positive thing, or you could look at just a negative thing. The positive thing is that, they're scheduling a downtime to make, let's say, the whole process a bit smoother, a bit more profitable in the future, and maybe make it a bit faster as well. So yes, you could say it might be short-term pain for long-term gains. Of course, on the flip side, this is just them delaying the inevitable, and it's never going to reach profitability. Now, talking about profitability, they talk about cost efficiency here. So they are saying sustaining their focus and improving their operating efficiency remain key objectives for 2023 and beyond. We believe concentrating our investment dollars and resources on expanding the consumer business as well as fully realizing the potential of their existing commercial business represents the greatest opportunity to maximize our impact. Our first high-volume global platform, R2, will be fundamental to making this happen. So those rumors, leaks, let's say, of them making a bike here clearly just doesn't make any sense. They continue by saying they're implementing a company-wide program designed to maximize efficiency throughout the organization across the key cost elements of material cost, logistics, labor and overhead, indirect cost, and capex. So again, maybe short-term pain for long-term gain and profitability might make sense. Then going back to the assets and more specifically the cash and cash equivalents, so we went from $18.1 billion to now in this quarter, $11.5 billion. And just overall, things aren't really looking that much better. Cost of revenues increasing, gross profit obviously increasing in the wrong direction as well. And obviously the same story continues. Total operating expenses increased, loss from operations increased as well. And then last thing here, so adjusted EBITDA non-GAAP right now ending 2022 was 5.2 billion. They expected, I think that was, what did we say, 4.3 billion for 2023. So at least some improvements there. Of course, with free cash flow, there's no need to look at that. Still very, very negative. Now, I repeat myself again and again. I like the product. I like the vision that they have, but purely from investment standpoint, I don't think it makes sense right now, especially not if you have a company like Tesla, for example. Now, moving on to NIO. So we're going to touch on the deliveries a bit more and the margins than all the other numbers here. So vehicle deliveries were 122,486 in 2022, representing an increase of 34%. You can see here the deliveries from 2021 Q1 to Q4 2022. So basically close to doubling there. But things don't really look that rosy. If you look at the fourth quarter, vehicle margin was 6.8% in the fourth quarter compared to 20.9% in the same quarter a year before and 16.4% in the third quarter 2022. So really they took a huge hit here, and they explained the vehicle margin in the fourth quarter was negatively impacted by 6.7 percentage points due to inventory provisions, accelerated depreciation on production facilities, and losses on purchase commitments for the existing generations of ES8, ES6, and EC6. Now, of course, we can look at all the numbers here. Yes, if you look at vehicle sales, that increased nicely quarter over quarter 23.7%, year over year 60.2%. But all the rest, the profitability here has really gone out the window. And yes, it's a bit of the same picture when you look at the full year. So vehicle sales increased 37.2%, but again, all the rest, the margins are down. Gross profit is down as well, gross margin, etc., etc. Now, they do give us some extra information here. So deliveries in January and February 2023. So NIO delivered 8,506 vehicles in January and 12,157 vehicles in February. Now, the February deliveries increased by 98.3% year over year and consisted of 5,037 premium smart electric SUVs and 7,120 premium smart electric sedans. As of February 28, NIO's cumulative vehicle deliveries reached 310,219. Now remember, for 2023, they are expected to deliver 250,000 vehicles, which seems far-fetched, especially if you look at the outlook for Q1 2023. They expect deliveries of vehicles to be between 31 and 33,000 vehicles, so let's say 32,000 vehicles, representing an increase of approximately 20.3 to 28.1% from the same quarter in 2022. Now, if the goal is 250,000 vehicles in 2023, and in Q1 they're expecting to deliver only 32,000, that means that for the rest of the year, each quarter should deliver approximately 72,000 vehicles. And as we've seen before, that would be a record quarter, basically Q3 and Q4 put together. So again, I don't know how they'll achieve that. They are also saying that they are looking to achieve again those margins of 20%, 16 to 20% or so as they exit 2023 going into 2024. But to me, I think the big question here is, can we trust management? Is that goal 250,000 vehicles? Is it achievable, especially if Q1 will only be 32,000 vehicles? Can they ramp up so quickly? Of course, we know there are new models that they're launching this year, but with new models, of course, profitability might get hit in the short term. Can they ramp up quickly enough? Is the situation in China stable? Again, I think it's a long road ahead for NIO. Of course, they have huge plans, right? They always talk about NIO Lifestyle, NIO this, the battery swaps, going into Europe, into United States in the future. They have huge plans, but I think they should be focusing on the Chinese market right now, on getting to those 250,000 vehicles delivered for the year. Focus on one important thing instead of focusing on a lot of smaller things. I think most NIO investors would agree with me. I'm not an investor in NIO, but hey, I like looking at, let's say, competitors in the EV space. NIO is for sure one, but I think right now lack of focus and maybe a bit of trust from the investors when we look at management is definitely one of the reasons why the stock is taking a hit lately. And so to conclude, two companies that still have a lot of work to do to become more profitable, to become much bigger and be an actual huge player in the EV revolution. Of course, do share your thoughts down in the comments below. Do you hold Rivian or NIO or any other company out there? I know a lot of you do hold Tesla, but do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I see you all in the next one. Bye bye.